Introduction to loan signing. The loan signing business offers a specialized service within the notary public field, focusing on the accurate and ethical execution of loan documents. Loan signing agents, often referred to as notary signing agents, NSAs, act as impartial third parties, ensuring that borrowers properly sign and initial all necessary paperwork for real estate transactions. This role is crucial for lenders, title companies, and escrow officers, as it helps facilitate the closing process smoothly and compliantly. Understanding the intricacies of various loan documents and the legal requirements for notarization is fundamental to success in this profession. This course will equip you with the knowledge and skills needed to navigate this specialized industry effectively. Becoming a proficient loan signing agent requires more than just a notary commission. It demands attention to detail, strong organizational skills, and a commitment to professional ethics. NSAs are independent contractors who often work flexible hours, meeting clients at various locations to complete loan signings. The demand for qualified loan signing agents remains consistent due to the continuous activity in the real estate and mortgage markets. This career path offers significant opportunities for individuals seeking an entrepreneurial venture with a direct impact on important financial transactions. It is a rewarding profession for those who enjoy working independently and serving their community. Role and responsibilities of an NSA. A notary signing agent (NSA) plays a critical role in the loan closing process, acting as an impartial witness to signatures and ensuring all documents are properly executed. NSAs must verify the identity of the signers, administer oaths or affirmations when required, and accurately complete notary certificates. Their primary responsibility is to guide borrowers through the signing process without offering legal advice or explaining the terms of the loan. Maintaining impartiality is paramount, as the NSA represents neither the lender nor the borrower, but rather the integrity of the signing process itself. This demands a high level of ethical conduct and strict adherence to notary laws. Beyond the core notarization duties, NSAs are responsible for organizing loan packages, ensuring all pages are present, and confirming that every required signature, initial, and date is correctly placed. After the signing, the NSA must perform a thorough quality check of the completed documents before packaging and shipping them back to the title company or lender. Timeliness and accuracy are crucial, as delays or errors can jeopardize the loan closing. NSAs must also maintain meticulous records of all notarizations performed, as required by their state's notary laws. This comprehensive set of responsibilities underscores the importance of proper training and attention to detail in this profession. Notary Public Commission. The foundational requirement for becoming a loan signing agent is holding an active Notary Public Commission in your state. Each state has specific eligibility criteria, application procedures, and training requirements that must be met. These typically include being at least 18 years old, a legal resident of the state, and passing a background check. Some states also require completion of a notary education course and passing a state-administered exam. It is imperative to thoroughly research and understand your specific state's laws and regulations governing notaries public before beginning the application process. This commission grants you the legal authority to perform notarizations. Once commissioned, notaries must adhere to all state laws, including maintaining an official seal or stamp and a notary journal. The commission is typically valid for a set number of years, after which it must be renewed. Renewal processes often mirror the initial application, including updated background checks and sometimes additional training. Staying informed about any changes to notary laws and regulations is a continuous responsibility for all notaries. Proper maintenance of your commission ensures your legal standing and credibility as a loan signing agent. This ongoing commitment to compliance is vital for a successful and ethical career. Understanding notary laws. A deep understanding of your state's notary laws is non-negotiable for any aspiring loan signing agent. These laws dictate every aspect of a notary's duties, from identifying signers to maintaining a notary journal and properly executing certificates. Ignorance of the law is not an excuse for non-compliance and can lead to serious legal repercussions, including fines, suspension, or even revocation of your commission. It is essential to regularly consult your state's notary handbook or official website for the most current statutes and administrative rules. Staying updated ensures that all notarizations you perform are legally sound and defensible. Key aspects of notary law include acceptable forms of identification, requirements for personal appearance, rules for administering oaths, and proper completion of various notary certificates. Understanding the difference between an acknowledgement and a jurat and when to use each is fundamental. Furthermore, notaries must be aware of prohibitions such as notarizing documents where they have a financial interest or acting as a notary for their spouse. Adhering strictly to these legal guidelines protects both the notary and the public, ensuring the integrity of the notarization process. Continuous education and review of these laws are vital for long-term success and compliance. Essential tools and supplies. Equipping yourself with the right tools and supplies is crucial for efficient and professional loan signings. The most fundamental items include your official notary stamp or seal, a high-quality embosser, if required by your state, and a detailed notary journal. Your stamp must be clear and legible, meeting all state specifications. A reliable printer is also indispensable, capable of handling large loan packages, often requiring both letter and legal-sized paper. Dual tray printers are highly recommended for seamless printing. Investing in quality supplies from the outset will save time and prevent issues during signings. These tools form the backbone of your mobile notary operation. Beyond the core notary items and printer, several other supplies enhance professionalism and preparedness. These include a variety of pens, blue and black ink, as specified by the lender, paper clips, binder clips, sticky notes for flagging documents, and a reliable scanner. A professional briefcase or carrying case is essential for transporting documents securely and organized. Additionally, a mobile hotspot or reliable internet access can be invaluable for last-minute document downloads or communication. Always ensure you have a sufficient supply of paper and ink cartridges to avoid interruptions. Being well prepared demonstrates professionalism and instills confidence in your clients. Setting up your workspace. Establishing an efficient and secure workspace is fundamental for a successful loan signing business, even if you primarily operate as a mobile notary. Your home office or dedicated area should be organized to handle document printing, scanning, and administrative tasks. Ensure you have a reliable internet connection and a quiet environment free from distractions. Proper lighting is essential for reviewing documents and maintaining focus during long hours of preparation. A comfortable chair and ergonomic setup can prevent fatigue and improve productivity. Your workspace should reflect professionalism and efficiency, even if clients rarely see it directly. Security and privacy are paramount when setting up your workspace, especially given the sensitive nature of loan documents. All client information and documents must be stored securely, whether physically in a locked cabinet or digitally with strong encryption. Implement measures to protect against unauthorized access to your computer and files. Shredding services or a cross-cut shredder are necessary for disposing of any documents containing personal identifiable information. Maintaining a clean and organized workspace not only enhances efficiency but also reinforces your commitment to data security and professional standards. This diligence protects both your business and your clients. Mortgage deed of trust. The mortgage or deed of trust is one of the most critical documents in a loan package, serving as the legal instrument that pledges the borrower's property as collateral for the loan. While both serve a similar purpose, their structure and parties involved differ based on state law. A mortgage typically involves two parties, the borrower, mortgagor, and the lender, mortgagee. A deed of trust, common in many states, involves three parties: the borrower, trustor, the lender, beneficiary, and a neutral third party, trustee, who holds legal title until the loan is repaid. Understanding which document is used in your state is essential. This document is recorded with the County Recorder's Office, creating a public record of the lien against the property. The mortgage or deed of trust outlines the terms under which the property is held as security, including the borrower's obligations to repay the loan, maintain the property, and pay property taxes and insurance. It also details the lender's rights in case of default, such as the power to foreclose. As a loan signing agent, your role is to ensure the borrower signs and dates this document correctly, often requiring notarization. You must verify their identity and witness their signature, but never explain the legal implications or terms within the document. Accuracy in execution is paramount, as errors can invalidate the lien and cause significant issues for the lender. Promissory note. The promissory note is the borrower's written promise to repay the loan amount to the lender under specified terms and conditions. Unlike the mortgage or deed of trust, which secures the loan with property, the promissory note is the actual IOU outlining the financial obligations. It details the principal loan amount, interest rate, payment schedule, and maturity date. This document is a legally binding contract that establishes the borrower's personal liability for the debt. It is a crucial component of any loan package, as it defines the financial agreement between the borrower and the lender. Understanding its significance helps the NSA ensure its proper execution. Key elements within the promissory note include clauses related to late payments, default, and prepayment penalties, if any. It also specifies how payments will be applied and the consequences of failing to meet the repayment terms. While the promissory note is typically not notarized, it requires the borrower's signature. As a loan signing agent, your role is to ensure the borrower signs this document in the designated areas. You must not explain the terms or offer any financial advice regarding the interest rate or payment schedule. Your focus remains on verifying identity and witnessing the signature, maintaining strict impartiality throughout the process. Accuracy in signing this document is essential for the loan's enforceability. Truth in Lending Disclosure, TIL. The Truth in Lending Disclosure, TIL, is a federal requirement designed to protect consumers by ensuring they receive clear and comprehensive information about the cost of credit. This document provides a summary of the loan's key terms, including the annual percentage rate, APR, finance charge, amount financed, and total payments. The TIL allows borrowers to compare different loan offers effectively, promoting transparency in lending practices. It is typically provided to the borrower early in the loan process and again at closing, reflecting any changes. As a loan signing agent, you will encounter this document in nearly every loan package, and its proper acknowledgement by the borrower is crucial. The primary purpose of the TIL is to standardize the disclosure of loan costs, making it easier for consumers to understand the true expense of borrowing money. While the TIL is a critical consumer protection document, it is important to note that it has largely been replaced by the closing disclosure for most mortgage transactions under the TILA-RESPA Integrated Disclosure (TRID) rule. However, you may still encounter TIL disclosures in certain loan types or older loan packages. Your role as an NSA is to ensure the borrower acknowledges receipt and signs where indicated without interpreting the financial details. You must always maintain your impartial role and avoid offering any financial advice. Closing Disclosure, CD. The Closing Disclosure, CD, is a 5-page form that provides final details about the mortgage loan selected by the borrower. It outlines all loan terms, projected monthly payments, and the costs associated with the closing. This document is a critical component of the TILA-RESPA Integrated Disclosure (TRID) rule, designed to help consumers understand the costs and risks of their mortgage. Lenders are required to provide the CD to borrowers at least 3 business days before the scheduled closing, allowing ample time for review and comparison with the initial loan estimate. This waiting period is crucial for consumer protection, preventing last-minute surprises. The CD consolidates information previously found in the Truth in Lending Disclosure and the HUD-1 settlement statement. making it easier for borrowers to comprehend their loan. As a loan signing agent, you will guide the borrowers through signing and dating this multi-page document. Your role is strictly to facilitate the signing process, ensuring all required signatures and initials are captured accurately. You must never explain the financial terms, fees, or calculations presented in the CD, as this constitutes unauthorized practice of law or financial advice. If borrowers have questions about the figures or terms, you must direct them to their lender or escrow officer. Precision in execution is vital for this legally binding document. Notice of right to cancel. The Notice of Right to Cancel is a crucial consumer protection document, specifically required for certain refinance transactions and home equity loans, where the borrower's primary residence is used as collateral. This notice informs borrowers of their right to cancel the loan agreement without penalty within 3 business days after signing the loan documents. This rescission period allows borrowers a cooling-off period to reconsider their decision. The 3-day period begins the day after all 3 conditions are met. The loan documents are signed, the borrower receives the truth in lending disclosure, and the borrower receives 2 copies of the Notice of Right to Cancel. Understanding this timing is critical for NSAs. As a loan signing agent, you are responsible for ensuring that each borrower receives 2 copies of the Notice of Right to Cancel, and that they sign and date 1 copy acknowledging receipt. It is imperative that you do not explain the implications of the rescission period or advise borrowers on whether they should cancel. Your role is strictly to present the document and obtain the required signatures. The copies provided to the borrower are for their records, allowing them to exercise their right if they choose. Proper execution and delivery of this notice are vital for the legality of the loan, as failure to comply can extend the rescission period significantly. This document underscores the importance of consumer protection in lending. Affidavits and certifications. Loan packages often include various affidavits and certifications, which are sworn statements made by the borrower under penalty of perjury. These documents typically attest to facts such as the borrower's occupancy of the property, their marital status, or that they have not initiated bankruptcy proceedings. Examples include occupancy affidavits, name affidavits to confirm variations of a name are for the same person, and Patriot Act certifications. Each affidavit serves a specific legal or regulatory purpose, providing assurances to the lender or title company regarding the borrower's circumstances or compliance with certain laws. As a loan signing agent, you must ensure these are signed correctly. Many affidavits and certifications require notarization, meaning the borrower must swear or affirm the truthfulness of the statement before you, the notary. This involves administering an oath or affirmation and then completing a jurat certificate. For those that do not require notarization, your role is simply to witness the signature. It is crucial to read the instructions carefully for each document to determine if notarization is needed. Never advise a signer on the content or implications of an affidavit. Your duty is to facilitate its proper execution. Accuracy in completing these sworn statements is vital, as they carry significant legal weight and contribute to the overall integrity of the loan transaction. Mistakes can lead to legal complications for all parties involved. Receiving and reviewing documents. The first critical step in the loan signing process, after accepting an assignment, is to receive and thoroughly review the loan documents. Lenders or title companies will typically send the loan package electronically, requiring you to download and print them. It is imperative to review the entire package immediately upon receipt to ensure all pages are present, legible, and correctly formatted. Check for any missing pages, blank spaces that should be filled, or discrepancies in names and addresses. This initial review helps identify potential issues before the signing appointment, allowing you to contact the hiring entity for clarification or corrections. Proactive review prevents delays and ensures a smooth signing. During your review, pay close attention to the signing instructions provided by the hiring company. These instructions often specify which documents require notarization, which ink color to use, and any special handling requirements. Create a mental or physical checklist to guide you through the package, noting where signatures, initials, and notary stamps are needed. Confirm that the names on the documents match the signer's identification. This meticulous preparation is a hallmark of a professional loan signing agent. A comprehensive pre-signing review is not just a best practice. It is a fundamental safeguard against errors and a key to successful closings. It reflects your commitment to accuracy and efficiency. Printing and organizing documents. After reviewing the digital loan package, the next crucial step is printing and meticulously organizing all documents. Most loan packages are substantial, often ranging from 100 to 200 pages or more, and require both letter and legal-sized paper. A reliable dual-tray printer is highly recommended to handle this volume efficiently. Ensure your printer is well maintained and has sufficient ink and paper supplies. Print all documents clearly and legibly, checking for any smudges or incomplete pages immediately after printing. The quality of your printed documents reflects directly on your professionalism and the overall signing experience for the borrower. Poor print quality can lead to delays or rejection of the package. Once printed, the documents must be organized in the specific order required by the lender or title company, as outlined in the signing instructions. This often means separating borrower copies from lender copies and arranging documents in a logical flow for the signing appointment. Using tabs, paper clips, and binder clips to keep sections distinct is highly effective. Some agents create a signing script or a detailed checklist to ensure every document is presented and executed correctly. This systematic approach minimizes errors and ensures a smooth, efficient signing process. Proper organization is a cornerstone of a successful loan signing. It allows you to navigate the package confidently and professionally. Greeting and identification. The signing appointment begins with a professional and friendly greeting, setting a positive tone for the entire process. Arrive on time, or even a few minutes early, and present yourself in professional attire. Once you've greeted the borrowers, the absolute first step is to verify their identity. This is a non-negotiable legal requirement for all notarizations. You must request valid, unexpired government-issued photo identification from each signer. Acceptable forms typically include a driver's license, state-issued ID card, or passport. Carefully compare the photo on the ID with the signer present, and ensure the name on the ID matches the name on the loan documents. This meticulous verification prevents fraud and ensures the integrity of the signing. Record the details of the identification in your notary journal, including the type of ID, issuing agency, and expiration date. Some states also require a thumbprint from the signers for certain transactions. If there are any discrepancies or doubts about the signer's identity, you must not proceed with the notarization. It is better to reschedule or decline the signing than to compromise your commission and the legality of the transaction. Clearly explain the purpose of the identification process to the borrowers, assuring them it is a standard procedure for their protection. A thorough identification process is the cornerstone of a secure and compliant loan signing. It protects all parties involved in the transaction. Guiding signers through documents. Once identity has been verified, your primary role as a loan signing agent is to guide the signers through the loan package, indicating where signatures, initials, and dates are required. It is crucial to remember that you are an impartial facilitator, not a legal advisor or financial consultant. You must never explain the terms, conditions, or legal implications of any document. If a borrower asks a question about the loan's terms or figures, you must politely but firmly direct them to contact their lender, loan officer, or title company for clarification. Your expertise lies in the proper execution of documents, not in interpreting their content. Maintaining this boundary is essential for ethical practice and to avoid unauthorized practice of law. Present each document clearly, stating its title and indicating the specific areas for signatures, initials, or dates. Allow borrowers sufficient time to read documents if they choose, and be patient. Use the signing instructions provided by the hiring company as your guide to ensure every required field is completed. It is helpful to have a systematic approach, perhaps going through the package page by page or by document type. Encourage signers to ask their lender any questions they have. Your professionalism and efficiency in guiding them through the process will contribute to a positive signing experience. A smooth, well-managed signing reinforces your value as an NSA. Quality check and packaging. Immediately after the signing appointment concludes, and before leaving the location, perform a meticulous quality check of the entire loan package. This is a critical step to catch any missed signatures, initials, dates, or notary stamps. Go through each document page by page, comparing it against your checklist or the signing instructions. Verify that all notary certificates are correctly completed, including dates, venue, and your stamp. Ensure that any required borrower copies have been separated and given to the borrower. A thorough quality check at this stage can prevent costly errors, reschedules, and delays in the loan closing. This attention to detail is a hallmark of a professional and reliable loan signing agent. Once you are confident that the package is complete and error-free, proceed with packaging the documents for return to the hiring entity. Follow the specific shipping instructions provided, which often include separating the lender's copy, title's copy, and any other required sets. Securely bind or clip the documents as instructed. Prepare the shipping label and ensure the package is ready for immediate drop-off. Timely return of the documents is just as important as accurate execution. Delays in shipping can hold up funding and impact your reputation. This final check and packaging step ensures that your work is complete and ready for the next stage of the loan process, demonstrating your commitment to excellence. Shipping documents. Prompt and secure shipping of the completed loan package is the final critical step in the loan signing process. Most hiring entities will provide specific instructions and a prepaid shipping label, typically for overnight delivery services like FedEx or UPS. It is imperative to drop off the package at the designated carrier's location immediately after the signing, or at the very least on the same business day. Delays in shipping can directly impact the loan's funding timeline, potentially causing financial penalties for the lender or title company, and damaging your reputation as an NSA. Always confirm the drop-off deadline for overnight shipping in your area. This ensures timely delivery and maintains the integrity of the closing schedule. Before dropping off the package, double-check that the shipping label is correctly attached and that all required documents are securely enclosed. Take a photo of the tracking number for your records, as this can be invaluable if any shipping issues arise. Some companies may also require you to send an email confirmation with the tracking number. If you are responsible for providing your own shipping, always choose a reliable overnight service with tracking capabilities. Never leave loan documents unattended or in an unsecured location. Your diligence in the shipping process ensures that the loan closing proceeds without unnecessary hitches, solidifying your reputation as a dependable loan signing agent. This final action completes your service for the assignment. Common signing scenarios. Refinance. Refinance loans represent one of the most common types of loan signings you will encounter as an NSA. In a refinance, borrowers are typically replacing an existing mortgage with a new one, often to secure a lower interest rate, change loan terms, or access home equity. These packages tend to be extensive, containing a wide array of documents, including a new mortgage, deed of trust, promissory note, truth in lending disclosure or closing disclosure, and crucially, the notice of right to cancel. The presence of the notice of right to cancel is a key indicator of a refinance transaction involving a primary residence, granting borrowers a 3-day rescission period. Understanding this distinction is vital for proper execution. When conducting a refinance signing, pay close attention to the specific signing instructions provided by the title company or lender, as they may have particular requirements for certain documents. Ensure all borrowers whose names are on the title sign the new mortgage deed of trust, even if only one borrower is on the promissory note. Verify that the notice of right to cancel is properly executed, with each borrower receiving 2 copies and signing one to acknowledge receipt. Your role remains impartial. Guide the signers through the documents, obtain signatures, and notarize where required, without offering any advice on the financial implications of the refinance. Accuracy and adherence to instructions are paramount for a successful refinance closing. Common signing scenarios. Purchase loans. Purchase loan signings involve borrowers obtaining a mortgage to buy a new property. These transactions are often time-sensitive, as they are tied to a specific closing date for the property transfer. Unlike refinance loans, purchase loans typically do not include a notice of right to cancel, as the borrower is acquiring new debt for a new asset, not rescinding an existing one. The core documents will still include the promissory note and the mortgage deed of trust, along with the closing disclosure. There will also be numerous other documents related to the specific property, title, and escrow instructions. Understanding the urgency and distinct document set for purchase loans is crucial for an NSA. For purchase loan signings, it is especially important to be punctual and efficient, as multiple parties, buyers, sellers, real estate agents, are often coordinating around the closing time. Ensure all buyers who will be on the title sign the mortgage/deed of trust, and all borrowers sign the promissory note. Pay close attention to any specific instructions from the title or escrow company, as they are often the primary point of contact for these transactions. Your role remains to facilitate the signing, verify identities, and notarize documents without offering legal or financial advice. A smooth purchase loan signing contributes directly to a positive home buying experience for the borrowers and reflects well on your professionalism. Accuracy is paramount to avoid delays in property transfer. Advanced signing scenarios. Reverse mortgages. Reverse mortgages are a specialized type of loan designed for homeowners aged 62 or older, allowing them to convert a portion of their home equity into cash without selling the home or making monthly mortgage payments. These loans are complex and involve additional consumer protections due to the vulnerability of the target demographic. As a loan signing agent, you will encounter a unique set of documents, including counseling certificates, and often a longer signing process. Borrowers must undergo mandatory counseling from a HUD-approved agency before applying for a reverse mortgage. This ensures they fully understand the implications of the loan. Your role requires extra patience and clarity in guiding seniors through the process. Key documents in a reverse mortgage package include the reverse mortgage loan agreement, the note, the deed of trust, and various disclosures specific to reverse mortgages. Some documents may require the borrower to initial every page, and there are often specific instructions regarding the timing of the signing relative to the counseling certificate. It is crucial to be empathetic and allow ample time for the signers to review documents, as they may have more questions or require more time. Remember, your role is still strictly to facilitate the signing and notarize, not to explain the loan terms. If questions arise, direct them to their lender or counselor. Accuracy and patience are paramount in these sensitive signings, ensuring compliance with consumer protection regulations. This specialized knowledge enhances your value as an NSA. Advanced signing scenarios. HELOCs, Home Equity Line of Credit. HELOCs are another type of advanced loan product you may encounter. A HELOC is a revolving line of credit secured by the borrower's home equity, similar to a credit card but with the home as collateral. Borrowers can draw funds as needed, up to a certain limit, and only pay interest on the amount borrowed. These loans often involve a draw period and a repayment period with variable interest rates. Because HELOCs are secured by the borrower's primary residence, they typically come with a notice of right to cancel, similar to refinance loans. Understanding the unique characteristics of HELOCs is important for proper document handling. When conducting a HELOC signing, ensure that all borrowers on the title sign the deed of trust or mortgage, and that the promissory note, or equivalent credit agreement, is properly executed. The notice of right to cancel must be presented correctly, with each borrower receiving 2 copies and signing one to acknowledge receipt, initiating the 3-day rescission period. Pay close attention to any specific instructions regarding the variable interest rate disclosures or other unique HELOC documents. As always, your role is to facilitate the signing process and notarize where required, strictly avoiding any explanation of the loan terms or financial advice. Direct all content-related questions to the lender. Precision in these signings ensures compliance and protects consumer rights. Handling missing signatures dates. Despite meticulous preparation and a thorough quality check, sometimes a signature, initial, or date might be missed during a loan signing. If you discover a missed item before returning the package to the hiring entity, immediately contact the title company or lender for instructions. Do not attempt to correct the error yourself or ask the signer to initial or sign without explicit guidance. They may instruct you to return to the signer for correction, or they may provide alternative solutions. Prompt communication is key to resolving these issues efficiently and minimizing delays. Your integrity as an NSA depends on transparent and compliant error resolution. If a missed signature or date is discovered after the package has been returned, the process becomes more complex, often requiring a re-sign or a correction signing. This typically involves you returning to the borrower with the specific pages that need correction. The hiring entity will provide clear instructions on how to handle the re-signing, including which documents need to be redated or re-notarized. Always follow these instructions precisely. Document all communication and actions taken in your notary journal. While errors can happen, your professional response and adherence to proper procedures are crucial for maintaining trust and avoiding liability. Proactive communication and diligent follow-up are essential for successful resolution. Signer questions beyond scope. During a loan signing, borrowers often have questions about the terms of their loan, interest rates, fees, or legal implications of the documents. It is absolutely critical for a loan signing agent to understand and adhere to the strict boundary of their role. You are an impartial witness and facilitator, not a legal advisor, financial consultant, or loan officer. Answering questions that delve into the specifics of the loan terms, offering opinions, or explaining the meaning of legal clauses constitutes the unauthorized practice of law, which can lead to severe penalties, including fines, loss of commission, and legal action. Maintaining impartiality is paramount to your professional integrity and legal compliance. This requires a firm yet polite approach. When a signer asks a question that falls outside your scope of expertise, you must politely but firmly direct them to the appropriate party. Explain that as a notary signing agent, you are prohibited from providing legal or financial advice, and that they should contact their loan officer, lender, or title escrow company for clarification. Have the contact information readily available if possible. Reassure them that it is perfectly acceptable to ask these questions and that the lender is the best resource. Your professionalism in handling these situations reinforces your impartiality and protects you from liability. Never guess or offer an opinion, even if you think you know the answer. Adhering to this boundary is a fundamental aspect of ethical loan signing practice. Maintaining impartiality. Maintaining absolute impartiality is the cornerstone of a notary public's and loan signing agent's ethical obligations. Your role is to serve as an unbiased witness to the signing of documents, ensuring the integrity of the transaction. This means you cannot have any financial or beneficial interest in the loan being signed, nor can you be a party to the transaction. You represent neither the lender nor the borrower, but rather the public trust in the notarization process. Any action or statement that suggests favoritism or a vested interest can compromise your impartiality and lead to serious ethical and legal breaches. Your neutrality is critical for the validity of the notarization. Practically, maintaining impartiality means treating all signers equally, refraining from offering any legal or financial advice, and avoiding any personal comments about the loan terms or the property. Even seemingly innocuous statements can be misconstrued. If you know the signers personally, or if there is any potential conflict of interest, you must disclose it to the hiring entity and potentially decline the assignment. Your notary journal should reflect only the facts of the notarization, not personal opinions. Upholding impartiality protects you from liability and reinforces the public's confidence in your services. It is a continuous commitment that defines professional conduct in the loan signing business. This ethical standard guides every interaction. Confidentiality and privacy. Confidentiality and privacy are paramount in the loan signing business, given the highly sensitive personal and financial information contained in loan documents. As an NSA, you will handle social security numbers, bank account details, income statements, and other private data. You are legally and ethically obligated to protect this information from unauthorized access, disclosure, or misuse. This includes securing physical documents in a locked briefcase or cabinet, using password protection for digital files, and ensuring your workspace is private. Never discuss client information with unauthorized individuals, even family members or friends. Breaching confidentiality can lead to severe legal penalties, damage your reputation, and erode public trust. Your commitment to privacy is a critical professional responsibility. When disposing of documents containing sensitive information, always use a cross-cut shredder or a secure shredding service. Never simply throw away papers with personal data. Be mindful of your surroundings during mobile signings. Ensure conversations are private and documents are not left visible to others. When communicating with hiring entities, use secure channels and avoid sending sensitive information via unencrypted email. Your notary journal, which contains personal information, must also be stored securely. Implementing robust privacy practices not only complies with regulations like GLBA, Gramm-Leach-Bliley Act, but also builds trust with your clients and hiring companies. This diligence is a cornerstone of ethical business practice.